All right. Sorry about that. Again, technical difficulties. It is what it is, but still extremely excited to have our panelists here today. We've got Matt Chopiani from Freedom 55, Luigi Reale from IG Wealth, and Jasmine Sweetman from Sweetman Law Firm. Thanks everyone for coming on. Today is my Friday morning chat, and typically speaking, we go for about half hour to 45 minutes. Sometimes it goes a little bit longer, a little bit shorter. We've got lots and lots of questions today to ask everyone. Today's discussion is about Power Team. Hi, Luigi. What's up?
Sorry about that.
What's up? What happened?
I don't even know.
Okay, so
difficulties. Let's leave it at that.
What's that?
Technical difficulties.
Okay, of course. So today's discussion is about our power team, and I'm so absolutely honored that these three individuals, high caliber individuals, are part of my power team, and I wanted to share this with everyone because I think it's extremely important that each of us have a plan for our wealth, and it includes this power team. And really, the quarterback in all of this is the financial consultant, and that would be here in this case, Luigi Reale. He essentially will put together a plan for you, and it then has each one of us within that plan. So Luigi, if you want to proceed with discussing with everyone what that plan is and how each one of us is a part of your plan.
Yeah, sure. I think I'll take a step back and talk about kind of high level on power teams and why power teams are so important. If you look at successful businesses, let's look at for lack of a better example, I'd say Apple or some of the top tier businesses like Google. Those individuals at that level, not very different from your own personal life. You kind of look at your life as if it's a business. And you need to look at the different aspects or the different silos within a company. So, you have your legal team, you have your financial team, you have advertising and marketing team. And these are all reasons for those companies' success. And when you look at it at your own personal life, you're basically the CEO of your own success. And if you don't assemble the right team to put together the right strategy to move forward with, you're never going to achieve that success, right? So that's kind of the reasons why you need to pull in a lawyer, you need to pull in, a mortgage broker, you need to pull in all these different aspects of your business, which is your personal life. You need to pull in the professionals in order to put together that plan so you can move forward and reach true success. Now, someone would ask, what are the key components of the plan? Obviously, you guys are integral to my power team and the power team that we put forth to my clients. But things that we look for are cash flow, obviously, just managing cash flow. Are you effectively managing your cash flow? Do you have a proper tax strategy? And at that point, you pull in, obviously, the accountant to work with the accountant. And my job is to put together at a high level, put together that plan, and then bring it to the different key components or the key individuals. So that'd be the lawyer, that'd be the accountant, making sure that the insurance agent is taking well care of the individual as well. So again, you're managing your cash flow, which is tax planning, securing your retirement, making sure that you have the right plan and you know exactly where you're going so that you can clearly indicate what pathway you want to go down. And then, with Matt, making sure that, any plan, you have to deal with the foundation first, and that's protecting both your income as well as your wealth later on in life. So making sure that you have the right insurance products to protect yourself. And then, planning for major expenses. Do you have purchases that you want to make? And then from a business perspective, making sure that you have the business structure. And then one that is one that people don't necessarily, I think the statistics show 40% of Canadians have wills. I think that one is one of the ones that I like to highlight here because, you know, when it comes to planning your estate, it's super important to understand what the estate's going to look like, what your legacy is going to look like. And my job is to work alongside Jasmine to make sure that, you know, you're minimizing that tax impact and that tax burden moving forward. So, yeah.
Yeah, that's terrific. And I think if when you work with your power team, you do have that holistic view and even a bird's eye view, and then we each get into the nitty gritty of our specialized fields. I want to turn to Jasmine now and ask her a couple of questions about her aspect of the team. And what exactly does an estate and trust lawyer do, Jasmine?
So what we do is we really look at making sure that the legal documents are in place and that the plan will work for the individual or the family when they, as part of what they want to achieve when they pass away. And also, most importantly, and most people don't really remember this, is incapacity planning. So this is also making sure that everything is in place through powers of attorney should one or both of the couple become incapable and can't manage their own affairs. So we take a lot of what Matt will do on the insurance side and what Luigi do on the investment side and make sure that it all comes together and works for, unfortunately, the event that none of us can avoid, which is death, but also working with them for the tax planning, minimizing probate tax, seeing if we can do multiple wills situations. And then basically we come in at the end when all those pieces are put together to make sure the legal framework is there so that the plan they have put in place will work when they pass away.
Right. And oftentimes when I meet with clients, it's difficult to even have the discussion about insurance, not alone estate and plan, you know, for that such event, which is I'm even having a hard time saying death. But it's so important if you don't know where you're going and how it's all going to be laid out. Like, how do you know where did it even begin? And having a power team, I think that in your corner helps you establish all of this. We make sure that everything is covered, correct? And Luigi, again, going back to you being the quarterback of this, I always talk about with my clients diversification. I talk about like all of that, and I think it's so key to have you as a quarterback in all of this so that each one of our aspects are covered. And at what point do you say should someone start their planning at, you know, when they're in their 20s and their 30s, when they've established? And I'll ask each one of you that question as well. Yeah,
I think I mean, to be quite frank, I think the simple answer is when you're ready. Ideally, the earlier you do it, the better and the more realistic outcome you'll have and more success you'll have in achieving your goals and your plan. So, I mean, I just got off the phone yesterday with a 20-year-old, and we went through the process, and it was a big aha moment for this individual because they realized that they're working along, in their 20s, and without setting those goals and setting that vision, they have no chance of achieving it. But now, we can all kind of reflect on, those friends that took the necessary steps in their early stages in life and how much better a position they are now. So, the short answer is the sooner you get on your plan, the sooner you work that out, and the sooner you figure out what you want and what you want to achieve, the more successful that plan will be. Yeah, for sure. And Matt, your portion in all of this is insurance, like liability, personal insurance. So do you want to just go through that and how it connects to all of us? And
sure.
Yep.
I'll answer the other question that you were posing to everybody, which is when should people
Yes.
think about putting together a plan? And a good rule of thumb is anytime there's a life-changing event. So even if you've got plans in place or whatever plans you have in place, as soon as something major happens in your life, that's when it's time to sit down and relook at those plans, whether it's getting a mortgage, having kids, coming into some money, changing your jobs, whatever changed majorly in your life. Now you have to sit back and look at the plans you made and see, do I need to adapt any of those plans? From an insurance standpoint, we're really just the vehicle to provide money to fulfill those plans. And that's why it's important that I get to know what are the client's plans. And one of the first questions that I always ask them, especially if they have children, is what happens if you die? Who's taking care of the children? And also who's controlling the money? Because often that can lead to
Right.
some complications. And that's when they either say, yeah, I've got a will and a financial plan in place, or they say they don't. And in either case, even if they did, it's important they talk back to those professionals to make sure that we are aligned in what we do, because it will affect how the policies are put in place. It will affect how we set up beneficiaries. And part of our jobs, I think all of us as professionals, the hardest part is to uncover with the client what is any complications. And it's asking those tough what if questions. Whether there's outside businesses that they own or any other properties they own, if there's blended families, split families, like these are all things that affect the way Jasmine will put in an estate and trust plan, and also the way Luigi will look at his financial plan, and how we set up beneficiaries for insurance, and who's owning the policies and who's paying for the policies. So clients are really good at talking to all these different professionals, but are the professionals talking to each other, or is the client making sure that all those plans are overlapping? And that's really where you get the essence of a power team.
Yeah, that's an awesome point, and I saw all of us nodding our heads. It is definitely the benefit of that. Matt, I know you were talking earlier about life events, and again, I would be a small piece of that puzzle. It's the mortgage insurance, and I know we've debated about this, and I'm totally on your side. I always recommend that they speak to a professional like yourself. Many people don't know the difference between the mortgage insurance and what you offer. And just quickly, if you want to provide your definition and pros and cons of that, and then I'll get to Jasmine and ask the question, when is a good time to start estate planning?
Sure. Well, as you know, when they're coming to get a mortgage from you because they're buying a property, whether it's their first one or they're renewing, it's an exciting time, and they finish signing a stack of papers, and the last one you're legally obligated to offer it. You're saying, here, sign this, and if you die, your mortgage is paid. And people do it, and it's good. Well, they just bought insurance, and that's a good thing. It's important. At least that one thing will be taken care of. But they purchased insurance. They're paying for this policy without really understanding how it works. And it's a great tool for protecting the lender, and that's why it's built into the process of getting a mortgage. The government certainly doesn't want people losing houses when there's a death. But at the same time, it is there to protect the bank or the lender. The lender owns the policy. If a client decides to change lenders when they renew, they may have to requalify for this insurance. If there is a death in the family, the proceeds will go just to pay off the outstanding debt, when in reality the family might need the money for other things. So it's very important, once that policy is in place, because they took out the loan, that they review it to see, do I need to get a personal policy either to complement or to replace? Because now I can make sure I control where the money goes. I can control what amount of money is covered, because we also look at the changes that will happen in the future. If somebody upsizes their house, they have to requalify for insurance. And one of the other potential cons, which is really publicized, is the post-claim underwriting. When you purchase the insurance through the creditor, you really haven't been underwritten properly. So at the time of death, and it doesn't happen all the time, but there is a chance that the insurance companies can go and look through your personal situation at the time of application and deny paying that claim. Whereas if you've gone and purchased personal insurance, all that underwriting for most companies, especially the reputable ones, are done ahead of time. So when you have that policy, it's now underwritten, and the payout process is a lot simpler, quicker, and there's really less complications. So it's not to say it's that the mortgage insurance through the lender isn't good, but I would say about 90 to 95% of the time, people are better off looking at personal options. But there are times when the creditor protection is good, or possibly the only option for them.
Yeah, and oftentimes when I have to discuss this, people often ask me, "You're not an insurance broker. Why do you need to, go through this with me?" And we're obligated to. We're obligated to talk about insurance. And admittedly, I am not an insurance broker, and I'm more comfortable providing them your name rather than offering what I have, because I do understand the pros of going your route versus the bank route. But if they're in a pinch, I always recommend to take the lender insurance, and then meet with you afterwards, because God forbid something were to happen. At the very least, let's get them covered. A very important thing that a lot of first-time buyers are not aware of. So something that I wanted to bring to light. I want to get over to Jasmine now, and she can answer the question, when is a good time to estate plan? And then what is a power of attorney? Like, give us some background on the legalities of everything.
So much like Luigi, there really isn't, or Matt even, there really isn't a bad time to have a will and to think about your estate plan. One of the myths we come across with clients is that they think, well, I don't need a will until I own a house, or I don't need a will until I start my family. And that's really missing the point, because the will is intended to be an organic document. A lot of people, the other myth is, well, I've got a will, I don't even have to look at it again. And then unfortunately, part of that is there's a bit of a stigma around having a will. It's that bad 4-letter word, because it does associate, your thoughts with death. No one wants to think about that. But really, really like to emphasize, it is an estate plan. The will and the powers of attorney are just the documents that implement that estate plan. So as you're going through life, as you're changing your needs on the insurance side or investment side, it's important to make sure that the legal documents, the estate plan, also fits where you are in your life cycle. So as with insurance, if there's a significant life event, we say that should prompt you to review your wills and the plan that you do have in place. So I would say any age, at any time, is a good time to start and to have a will, and then keep it on your radar screen as you go through life and the changes that you go through. Powers of attorney are, I would say, the lost cousin of estate planning. Lawyers, of course, present company excluded, but lawyers tend to forget about, or they do the powers of attorney are an add-on. So they really focus on the will, and don't spend a lot of time on the powers of attorney. And my personal view is that actually powers of attorney are in a way more important than your will, because the government has recognized that fewer than 50% of Canadians do have wills. So there is a statute, a legislative scheme, that is a backup scheme as to how an estate would be distributed if someone dies without a will. It's not the best plan, but it is a plan. Whereas on the power of attorney side, or incapacity planning, there isn't really a backup scheme. So it would mean going off to court, having the court appoint someone as your guardian for property. It means potentially a fight between who is going to look after mom's money and things like that. So they really should be front and center of your estate plan, so that you're choosing the individuals that will make the decisions on your behalf at a time when you're vulnerable, at a time that you're not fully engaged in your own affairs because you don't have the capacity to do so. And that incapacity can happen at any time. You could be in a car accident in your 20s, in your 30s, and no longer be able to manage your affairs. So it isn't something for, another myth, it isn't something for, that I'm in my 80s or 90s, I'm getting old, and therefore I need a power of attorney. So anyway, hopefully that explains the difference between the two. So the powers of attorney operate when you're alive, and it operates when you pass away.
Yeah, that does. That's awesome. Luigi, I want to take it back to you. we had spoken at length a couple weeks ago about budgeting and all that kind of stuff. At what point? So I'm wanting to purchase a house, and a client, or let's just say a client comes my way wanting to purchase a house. When do you want to see that client?
I mean, earlier in the process, the better, just because, you want to take advantage of the obvious, which is budgeting. You want to find out, or the individual would like to find out, what government, programs are out there to help them. If they're a first-time home buyer, does it make sense to maybe put some money away into RSPs and utilize that program? There's a couple of other programs out there as well. But I mean, the sooner the better, because really you need to find out exactly what they're looking for in terms of, their goal, how much money they need to save, what type of home they're looking for, and putting those realistic goals into practice and making sure that, if they want to buy a house on the bridle path, that, they could potentially do that, or should we level set those goals? So, I mean, earlier in the process, the better. Yeah.
Yeah, and sometimes it's simultaneously. It happens 6 months before, even 2 months before someone puts in an offer, and then we're working with them. I guess my main message that I want to convey with respect to my profession is get that pre-approval in place sooner rather than later. Know your numbers. And oftentimes people don't know their numbers. They know and you'll be surprised, a lot of people don't even know how much they make and whether they're self-employed, full-time, the structure of their business. And it isn't until they do go through that pre-approval process that they learn this information. And, I pick up certain things to say, well, you really need to speak to a tax specialist to make sure that next year you'll qualify, because we need 2 years notice of assessments because you're self-employed and you didn't draw enough money. So our main message always is know your numbers. And the numbers that we talk about is the math behind it, income versus your debt ratios. What is your credit score? What does your credit bureau say? Oftentimes people don't even know that. And there's a huge difference between, Equifax, who reports the FICO score, versus Credit Karma, for example. So know those and know them ahead of time so that we can correct those blemishes on your bureau before you put in an offer in a property. And then with your credit score and your bureau, keep track of it at least once or twice a year. Go on Equifax, pay the additional $30 each time, and know what's on your bureau. It's so important. We had a client not too long ago who didn't know there was a blemish on it, and we helped fix it so that now they're able to buy a home. So there's the credit score.
Angie, if I may
Yes.
jump in there, I don't know if you saw my microphone there.
Look at you.
So I think that's a good segue, because what I wanted to do was obviously you have your power team here, which is fantastic, but I want to kind of highlight the importance of a mortgage broker within that power team. Okay.
Thank you.
And
sure.
That being said, we have, as you know, oh, my apologies there. So I obviously, I refer to Angie quite a bit, and within that power team, sorry, let's take a step back here. That was bothering me. I apologize. So let's take a step back and kind of highlight at a practical level. I referred a client to you, and maybe take us through that process and why a mortgage broker is so valuable, and how you were able to help these individuals out from a financial wellness perspective.
Sure. Again, going back to knowing the numbers, I mean, I have a 20-minute phone call with every single client that comes our way. And during that time, I talk a lot about knowing those numbers and credit score. The client didn't know much about what was happening on the bureau. Upon doing their underwriting my underwriter discovered that there was a blemish on that bureau, and that client was hoping to go to an A lender. Had we not pulled bureau, 3 months ago, she wouldn't have had time to fix that. So we had recommended that they get that proposal off the bureau, which they had, and it had taken just up until last week. And now we're going to be submitting to an A lender at the best rates possible. And that blemish is off their bureau, and their credit score just jumped up tremendously just so that we can get them the best rate. In essence, we now were able to save them hundreds of dollars a month.
Which translates into?
How much a month? I have to ask my underwriter.
No. In terms of the mortgage, how much high level? I'm not expecting an exact number, but how much does that save them over the life of that mortgage, do you think?
Well, gosh, Luigi, it was about $250 to $300 a month.
Amazing. And that's proactive in having that plan.
It is. Yeah.
Together. Right.
Yeah. I mean, the client was expecting to just renew at their bank. They got their rate and everything, but it wouldn't have been possible to do that if she had continued and not fixed her bureau. So there's lots and lots of stories like that. And when it comes to even first-time buyers, they wait maybe 6 months before to say, hey, we're going to buy in 6 months. Come to us a year and a half before so that we can talk you through it. Getting a budget through Luigi. Do you know what your budget are? Again, know your numbers. Yeah. And then people who have existing mortgages, know your numbers. Get a mortgage checkup every year. So that's how I can come into
awesome.
Even if you have an existing mortgage, there could be ways of saving you money that you don't even know. So
yeah.
And awesome. be a little bit more active. But when you have a power team who's taking care of we're being active for that particular client instead of that client running around individually finding their own power team. So, Matt, is there anything else that you wanted to add in the mix today?
Well, in relation to the team, I know that it makes my job easier, but also makes the client's jobs easier if there's communication between maybe not necessarily the power team members themselves, although sometimes that has happened where I deal directly, with permission, I deal directly with their lawyer, with their accountant to ask some questions. But if they're talking to one of us, they should be talking to all of the professionals in their network. Because if they've changed something on their insurance side, they might have to relook at the will because maybe the beneficiaries are changing. Maybe they're skewing now their will. If they've got that new job and everything, that they've gone to their financial planner and changed their savings goals, maybe their insurance needs to change as well because the numbers now have changed. Obviously, taking on more debt will require them to relook at their will and relook at their financial plan and relook at their insurance. So the biggest tip for anybody is if you've gone to see one of your professionals, check with all of them to make sure they all know. It's almost like the doctors, like all the specialists report back to the GP what happened. Like the GP might send them there, but then after that, all the files get all sent back. So everyone's in the loop, everyone understands, and then the client understands, because it's those surprises. You made a great plan with one of your pros, then you didn't touch it for 20 years, and you've done all these other changes with other professionals, and then all of a sudden there's a death and you realize, oops, this is now going to be a problem. It might not be life and death. Well, it's death, but it might not be a major problem, but it could be costly.
Yeah, agreed. Jasmine, is there anything that you wanted to leave everyone with respect to our trusts and our wills?
No, just to remember that it is the three-legged stool. So you do need to make sure that you do cover the insurance, the financial, the investment, as well as the estate plan, and certainly being educated and you know, working with individuals who know about the concept of the power team. Actually, we call it the dream team, which may actually be a nicer way of talking
Well,
about it.
we are.
It's making sure that you do actually work with individuals who understand this concept, because otherwise you're really just shortchanging yourself.
That's a really good point. Luigi, you want to end off with some notes?
Yeah, I think I just want to echo the same sentiments that both Matt and Jasmine mentioned, that, you know, your plan and being active with all the participants within your power team or your dream team are super important. And for that reason, it's very important to communicate effectively with your financial planner, and make sure that you know, full disclosure, let them know what your true goals are, what your true situation is. And it's a living, breathing document. And anytime, you know, something happens within your life, it should be readdressed. And more importantly, you know, it's a partnership. It's a partnership with the financial planner. It's a partnership with your lawyer. It's a partnership with your an investment advisor, and your insurance advisor, as well as your mortgage broker. And really, these things should be reassessed every 3 to 6 months. And if you're not sitting down and reassessing your plan every 3 to 6 months, you're going to be shortchanging yourself. So maintain that communication, and you'll come out better on the other end.
Yeah, I love that. It's a living, would you say it's a living, breathing?
It's living, breathing document. At IG,
it really is.
We call it the living plan.
Yeah.
Because it's always being reassessed. And I mean, the goalposts are always changing, and you want to make sure that even though you're veering off your course a little, that we course correct it in time before there's some drastic changes.
Yeah. I often get clients when I'm asking them to do the mortgage checkup annually. They're like, oh, I don't want to bother you right now. It's like, you know what? Bother us. Be active in your financial plan. By bothering us, which is you're not bothering me whatsoever, we can save you money. We can save you heartache if things go wrong, and time, and I mean, the heartache, I think, is the key one here. I want to open up to the attendees right now if there's any questions that they have, and we'll just wait a couple minutes. Thanks, guys. I think that was really awesome. I apologize again about the whole Facebook thing. I'm not sure what the heck is happening. I think I need to have Darren in on this on my internet to see if
you should be part of our power team.
Yeah. Just waiting another minute. Does anyone have any questions? Oh, I think. Oh, wait a minute. We got a question here. Okay. What is the best way to reach all of us? Actually, that's a very good point. So Matt, why don't you start, and we'll go Matt, Luigi, and Jasmine, and then me.
Oh, in terms of contact information?
How to reach us, yes.
Oh, well, email is usually the best way. I can be reached at matthew.chopani@f55f.com. That's probably the best way. Also, if you just Google the name, you'll see the website and the Facebook business page. I share some information on there. Not as active as a lot of things you get in the feed, but from a contact perspective, that's the way to go. And you'll also see some material from some of the other professionals that I work with that way.
Awesome. And Luigi?
Yeah, you can contact me. Just do a Google search on me, Luigi, Luigi, Reale, Reale. You can just do a quick search on that. My personal website is luigireale.ca. You could also reach out to one of my great partners here that are on the Zoom call today. And I'd love the opportunity to sit down and see if we can help you out in some way.
Awesome. Jasmine, there is a question for you. So let's answer this question, and then you can leave off with how to contact you. The question is, does making a will have a certain cost that I should be worried about?
I would say no. I mean, you need a will, and a will that's done right. So there is kind of the model, you know, you get what you pay for. So, and it's too valuable a document, I think, to be really stressing out over the cost. Because as we said, once you do your will, it basically, usually they last about 10-year cycles. So if you kind of factor the cost over 10 years, it really at the end of the day is not that, that big a financial burden. So, and most lawyers will have, will work with you on the cost end of things, since, especially with us, because our philosophy is it's important that everyone have a will. So if cost is a factor, then we will, work with you on that end.
Right.
And so certainly don't make cost something, why you don't do a will.
Yeah.
To contact me, again, the website at sweetmanlaw.com, as well as personally, my email is jasmine@sweetmanlaw.com, and Sweetman is spelled SWEATMAN.
Awesome. And for me, you can, I'm very active on social media, so you can either find me and message me at Angie, through Angie Pettyjohn, my personal page, or the Pettyjohn team page, either one. Victoria, actually, she will be sharing all of your details and information when we follow up with everybody. So that will be shared with them as well. Let's see, I think we've got, oh, someone's asking, Jasmine, this will be the last question and then we'll wrap up. Jasmine, do you have to get a new will, new one every 10 years? Question.
So not legally, there's no legal requirement that every 10 years you get a new will. It's more, it's recommended that unless, when there's a significant life event, so that what we mean by that is marriage, death, something, the family grows, you move, you purchase more other property, you inherit money. So any of those things that would suggest that you need to revisit the plan on all levels. But we do say actually every 5 to 7 years is when you should pull it out, read it, and make sure it still works. So you don't necessarily have to get a new will every 10 years, but it's more the process of keeping it as that organic document, keeping it front of mind that I should be reviewing everything every 5, 7, 10 years, or if there's that significant event that happens.
Great. Fantastic. All right, guys. Thank you again so very, very much. The Pettyjohn team thanks you. And we look forward to many, many years of great power team and success amongst all of us.
Thank you.
All right.
Thank
Bye,
you.
everyone.
Right. Thank you.